Welcome to From A to Zelling. I'm your host, Alex. If you've been following the South Florida real estate market lately, you've probably got whiplash. One minute you're hearing crash, the next it's boom. So what is really going on? Today, we're going to unravel this exact paradox. So what's the deal? You see one headline screaming slow down, but then the very next one is all about a luxury boom? It feels impossible, right? Is the market cooling off, or is it actually heating up? Well, that's the big question we're tackling today. And hey, this right here, this perfectly captures the whole mess. Just take a look at these numbers from August. Total sales volume across South Florida, down a pretty hefty 11% from last year. Okay, slow down, right? But wait, in that same period, luxury condo sales in Broward County shot up by 15%. How on earth can both of those things be true at the same time? All right, to get to the bottom of this, let's start with one side of the story. Let's look at all the evidence for a market slowdown. These are the numbers that are really driving those cooling market headlines, and honestly, they paint a pretty convincing picture. The first big clue, you just gotta follow the money. The total residential dollar volume, that's basically the total value of all homes sold, it fell 4% year over year. To put it simply, less money is changing hands in the market. That is a classic, you can't argue with it, sign of a cool down. Okay, next up, let's talk about speed, or the lack of it. It now takes, on average, 79 days to sell a home here in Florida. Now that's 17 days longer than just a year ago. Think about that. Homes are just sitting there for more than 2 extra weeks. It tells you buyers are taking their sweet time and sellers are finding it a lot tougher to get the price they want. And here is a huge one, inventory. In Miami-Dade alone, the number of single-family homes on the market has just exploded. We're talking a surge of over 28% in just 1 year. This isn't some little bump, folks. It's a flood of new choices for buyers, and that completely changes the game. The power is shifting, no doubt about it. And this leads to a really interesting thing we're seeing called delistings. It shows this stalemate we're in perfectly. Get this, for every 100 homes listed for sale in Miami, a jaw-dropping 59 of them are eventually pulled off the market without ever selling. Why? Well, sellers are remembering that crazy red-hot market from a couple years ago, and they don't want to drop their prices. So instead of selling for less, they just give up and retreat. It's a total standoff. Okay, so that sounds pretty convincing for a slowdown, doesn't it? Case closed? Not so fast. Now we're going to pivot and look at the other side of this coin, because there are some incredibly powerful forces not just keeping the market afloat, but actually pushing it forward, especially at the very top. So what's the secret weapon here? Well, the experts at the recent Miami Real Estate Forum basically laid it all out. They point to these 4 huge pillars. You've got this relentless wave of wealth moving in from other states and countries. You've got a booming tech and finance scene bringing in high-paying jobs. You've got this global reputation as a safe bet for your money. And, crucially, a huge number of cash buyers who couldn't care less about rising mortgage rates. And let's just put a number on that tech boom for a second, because it's wild. The number of data science jobs in the Miami metro area has skyrocketed by 650%. That's not a typo, 650%. This shows us we're talking about a real, diversified economy that's pulling in a whole new class of high-earning professionals. And guess what? They all need a place to live. And you know who's not worried? The people who are literally building the future of the city. Their confidence is off the charts. This quote from a top developer at that same forum really says it all. They called South Florida the strongest market, certainly in the United States, with a very good future. I mean, that is a massive vote of confidence in the long-term value of this region. So all this confidence, all this economic muscle, where is it showing up the most? Well, it's crystal clear in one specific place, the luxury market. While the rest of the market might be tapping the brakes, the high-end segment is absolutely on fire. It's completely ignoring the slowdown story. I mean, this chart just makes it impossible to argue with. Just look at the year-over-year growth in luxury sales. Miami-Dade luxury condos, up almost 11%. Broward, up a whopping 15%. Even luxury single-family homes up in Palm Beach are up 7%. This isn't just things holding steady. This is strong, active growth happening at the very top of the market. Okay, so we've got a slowdown and a surge happening at the exact same time. How do we make sense of this? The key really is to stop thinking about this as one single market. It's not. What we're actually looking at is a tale of two, maybe even three different markets all operating under the same roof. And the absolute best way to understand this is something called the barbell effect. Just picture a barbell. It's heavy on the ends, but it's thin in the middle. Well, that's South Florida's market to a T. You've got incredible strength at the high end, that's the luxury segment, and it's pretty stable at the more affordable end. All the weakness, all the softness, it's concentrated right there in the middle. Now, this right here, this table is really the aha moment. Just look at the huge difference between single-family homes and condos. Prices for single-family homes, they're still climbing, even if it's just a little bit. But then you look at condos in Broward and Palm Beach, their median price is down a shocking 10%. This tells you everything. The slowdown isn't hitting everyone equally. It is hammering the condo market way, way harder than the single-family home market. Okay, so now that we've got a much better handle on what's happening right now, let's do what we all want to do. Look into the future. What are the leading indicators telling us about where this market is headed in 2026? So, if you want to predict the future of real estate, the pros look at one thing very closely: pending sales. These are simply homes that are under contract but haven't closed yet. You can really think of it as a crystal ball for the market because it shows us what actual sales are probably going to look like in the next 30, 60, even 90 days. And what's so interesting is that for the first time in what feels like forever, our crystal ball is finally showing us something positive. Back in August, pending sales for single-family homes actually went up 4.7% compared to last year. Even condos saw a tiny little tick upwards. This is a really big deal because it could be the first sign that buyer momentum is finally starting to come back. So what could take this little spark and turn it into a real rebound? Well, according to the chief economist for Miami Realtors, there's basically one magic number we're all watching. They believe a full recovery in 2026 really depends on one thing: mortgage rates falling back down into the 6% range. If that happens, it could unlock a huge wave of pent-up buyer demand. So, this is the predicted chain reaction, the potential path forward. Step 1, mortgage rates have to drop to around 6%. Step 2, that unlocks all that pent-up buyer demand. Step 3, the forecast says single-family sales then rise by about 5%. And finally, Step 4, price growth cools down and stabilizes at a much more normal, sustainable 3.4%. That's the recipe for a more balanced market in 2026. And that really leaves us with the one big, fascinating question that defines this exact moment in the market. On one side, you have buyers who are more patient than they have been in years, just waiting for the right deal. On the other, you have sellers who are stubbornly refusing to lower their expectations from the boom times. So in this high-stakes standoff, who blinks first? The answer to that is going to write the next chapter for South Florida real estate. And that's your comprehensive look at the market for this week. For a deeper dive into the data, you can always visit us at GetZelling.com. I'm Alex, and this is From A to Zelling. Join us next week.